America, I need your help. We caught the IRS, DOJ, and elements of a corrupt judiciary engaging in fraud on the American people in the U.S. versus how. And now the public gets to help finish them off. A formal complaint was lodged October 3, 2024, with Treasury Inspector General for Tax Administration, aka TICTA, under its employee integrity remit. It details how specific IRS personnel allegedly manipulated computer records and how an IRS attorney concealed that misconduct during district court litigation involving a case claiming that Mr. Ebenezer Howe owed back taxes. In short, this case is documenting multi-layered fraud across the government, including the IRS, DOJ, and judicial system. The complaint shows that the sequence of acts, the digital artifacts left in IRS data, and where DOJ relied on those outputs in U.S. v. Howe, now on appeal in the Ninth Circuit. Here are the names: Revenue Officer Bradley Marler and IRS Attorney Kimberly L. Clark. The watchdog, TIGTA, has the case, TRN-2410-0364, and we need one simple thing: the status and the estimated completion date of TIGTA's employee integrity investigation. Why does this matter, and why does it matter to you? Well, a firm completion date and ultimately TIGTA's findings are critical to the Ninth Circuit appeal. With that date, we can move to pause briefing so the court doesn't rely on disputed records. With the results in hand, we can seek relief that could stop the forfeiture of Mr. Howe's home. If TICTA hasn't moved, perhaps a public inquiry can jumpstart action. If TICTA says closed, no findings, your outreach can force a re-examination. Here's where you come in. I'm bringing you all a very important and significant call to action. Would you politely contact Acting IG Heather Hill and ask for the status and estimated completion date for TRN-2410-0364 involving IRS Attorney Kimberly Clark and Revenue Officer Bradley Marler. Ms. Hill's email and phone number are below. Be firm, be respectful. Let's get the date, make the courts wait for the truth, and stop government from using tainted data to take anyone's home.
And now, ladies and gentlemen, the star of our show, direct from the bar,
PB.
What is going on out there, peeps? Good Lord. How many people were corrupt under the Biden administration? This is the shit they try to do, take people's property. I wonder why they wanted 86,000 more IRS agents to go after people. It wasn't that they were going after the rich. They were going after the poor and trying to figure out how to screw us over and take our property from us. Anyways, there's a lot happening in the gold and silver market, so let's go ahead and get into this, shall we? Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. Take a look here. We got Bitcoin at $114,574.08. Ethereum at $4,202.50. XRP at $2.88. Solana is at $211.05. Dogecoin's at 23 cents. Cardano is at 80 cents. Chainlink's at $21.56. Avalanche is at $30.02. XLM, Stellar Luma, is at 37 cents. Gold is currently at $3,872.80 per ounce. Yes, $3,872. Silver is at $47.09. That's per ounce. Gosh, I remember telling people about silver when it was $11 an ounce. Some of you took advantage of it and invested into this, and I'm very happy for you. But we're going to listen to a clip from Andy Shipman. But before we do, let me just tell you this. If what he says is going to happen happens, let me show you what people are going to look like trying to get to gold and silver. I'm not going to deny it. I want to do it. Come on, man. You guys will be going like crazy, running each other over, flipping through bushes. Oh my God, it's one of the best videos I've ever seen. Go ahead, comment down below how much you laughed at that video.
The way that it typically works is that a cup and handle is a continuation pattern. The cup is the long base. In silver's case, from the early 1980s through the decades of the consolidation. The handle is the pullback, the tightening range, like 2011. So once prices break above the rim, that $50 price that we saw in 1980 and 2011, the price can go parabolic. And when you throw in the shortage, when you throw in the demand by the big money, when you throw in the demand by the BRICS countries, etc., I don't know, triple-digit silver isn't really so out of control. It's not out of line as far as I'm concerned. One last point I'd like to make about gold and silver. You know, it's interesting to me that, and in particular gold, because silver has yet to catch the same fire that silver has, that gold has caught. And, you know, we look back over the last half a year or so, and the S&P 500 in the last 5 months or so is up almost 1,700 points. That's one of the strongest rallies in history, right? Gold is up about almost 40%, about 39%, when compared to the S&P's return over the last 5 months, which is one of the strongest returns ever. Gold is up since 2023. Gold's up 100%, the S&P is 67%, that's great. But just over the last 6 months, where everyone's focusing on NVIDIA and stuff, where it's up as big as it is, 1,650 points, gold's run is up 4 times the S&P's return. Just in the last 6 months, it's up 37% versus 9%. And so, even amongst this AI boom, the biggest tech story since the internet, equities are still trailing gold, and yet nobody talks about it. So I remember when gold finally broke through $400. I couldn't believe it. It finally broke through $400 all those years ago. And if you would have told me that we are sitting at futures almost at $3,700 right now, and the media and no one understands it, to me, it's absolutely insanity. The big money understands it. And this is what I was talking about recently, where you have the largest exposure to stocks in the history of the stock market by mom-pa investor. You have the largest ever margin exposure, which is $1 trillion, and you have the largest exposure to options. So you have the public all in on stocks, all in on margin, and all in on speculation with options. At the same time, the investor, the big money, the insiders are leaving at a 7-to-1 clip, leaving the equity market and going where? I don't know. Maybe they're going to gold, as the biggest money in the United States is standing for billions and billions and billions and billions and billions, and can keep on going every single month. Every single month we are seeing huge deliveries into COMEX. And why does nobody talk about it? So let's just paint the backdrop for a minute and talk about our wonderful mainstream media that lacks all journalistic integrity, period. The greatest boom ever in the S&P because of the AI revolution is trailing the price of gold and silver. The insiders are dumping equities and running to, we don't know, as the public is all in the stock market. Not just all in, greater than at any time in history. In fact, not only are they in greater than any time in history, the valuation is at the highest point in history, greater than the 1929 crash, greater than the '08 crash, greater than the dot-com crash. And they're not just all in, they're all in on leverage and margin.
Notice him highlighting those crashes, which makes me concerned, because this is what these people do. They pull the carpet right out from under people. They manipulate the markets, crash it, take away your money. People who thought they were retired before the real estate market crash back in 2008 were sitting around on nest eggs, and those nest eggs crashed, and they end up having to go back to work just to make ends meet. So you need to be prepared for them to pull some shenanigans like that. And one of the ways you prepare yourself is having gold and silver in your possession.
And so with all of this metal coming into COMEX, both gold and silver, record amounts, net importers, record amounts, and the public not owning any, and it outperforming the S&P, where the hell is Fox News? Where the hell is this idiot Jim Cramer? Where the hell are all the people that are supposedly looking out for you and I? I found it interesting, in particular, that this guy, article from investing.com, invest.com. I'm going to read it to you because Adam Lipinski again, and I don't know if you remember Glupinski, I talked a lot about him a year ago, and I'm going to read what I said about him a year ago after I read this. I want people to think big picture. This is coming from the head of the Polish National Bank, the central bank. This is from investing.com. Poland's central bank announces plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen the country's financial security. Glupinski says in these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves, NBP Governor Adam Glupinski said in an emailed statement. He is proposing a motion to the bank's management board about raising the reserve target for gold to 30% from their 22%. Now, remember, I said I was all over this in 2023, screaming about this. Let me read to you what Adam Glupinski said in 2023. When asked, why does the central bank hold gold? Because it retains its value even if someone cuts off the power to the supply of the global financial system, which is based upon electronic accounting records. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. So he's basically saying, think about everything digital. When someone cuts the power to the financial system that is all based on electric accounting records, this is why we own gold. And now he's increasing it to 30%. When you look at the most well-informed traders in the world, forget about the wealthiest, we know that. They're the most well-informed traders. They drop crumbs, they give you clues. And so when we see a head of a central bank saying we're going to increase our holdings to 30%, instead of buying more treasuries, one that is aligned with the West, because we're very concerned, and if the power gets cut off to the global financial system, well, this is why we own gold.
You know, folks, I say this all the time. We are living through history, but most people are too distracted by their phone screens, by AI headlines, or by Jim Cramer yelling into a camera to see it. And I've got to tell you, when you look at what's happening right now in gold and silver, triple-digit silver isn't crazy at all. Not even close. In fact, I'd argue it's inevitable. Now, I'm not here to make wild claims for shock value. I'm here to lay out the evidence. And when you throw in the shortages, when you throw in the demand from big money, when you throw in the demand from BRICS nations stacking physical reserves, you realize that this isn't a fringe theory. It's happening in front of our eyes. Let's start with gold, because silver hasn't yet caught the fire that gold has. But if you look at the past 6 months, gold is telling a story so loud and clear.
Did you hear him that silver hasn't even taken off yet? We think it does because we've been eyeballing it. But he's saying, no, it hasn't. Gold takes off and silver usually follows right behind it. So there is time to buy silver.
It's deafening, unless, of course, you're the mainstream financial media who apparently need hearing aids. The S&P 500 has just had one of the strongest rallies in history. Over the last 5 months, it's up nearly 1,700 points. NVIDIA, AI, all the tech darlings. This is the biggest tech story since the internet, and yet gold quietly outperformed it. That's right, gold is up 37% in that same period. The S&P just 9%. Gold's return is 4 times greater in the middle of the most hyped stock rally of our lifetime. But nobody talks about it. CNBC, silent. Fox Business, crickets. Jim Cramer, he's still telling people to buy NVIDIA at the top while gold quietly trounces the index he worships. I remember when gold broke through $400 an ounce years ago. I couldn't believe it. And if you had told me then that we'd be sitting at futures around $3,700 today with no media coverage, I would have laughed you out of the room. But here we are. Since 2023, gold is up 100%. If the banking network seizes up, if cyber attacks hit the wires, your digital balance means nothing. Gold doesn't blink.
There's no question that something bigger is happening. I mean, there is no question about that, right? And a lot of it focuses on the LBMA. I'm going to try and make this part a little bit easier to understand. It's somewhat complicated for people who don't understand the lingo. I'll try to make it as easy as possible. First of all, when you look at gold, speculators are returning into the gold market. We can see that on COMEX with open interest rising again. That means open interest is the amount of interest, and people are interested in buying the metal. Open interest is rising, and prices are breaking out of this consolidation range. We see it bust out again. That's the normal link between purchasing and higher prices, right? But in silver, what we're seeing is something different. The rally is being driven not by speculators, but what seems to me by some form of a short squeeze. Because you have record high lease rates in London to lease the gold. That would be the same thing if you wanted to short a stock. There's a cost to borrow the stock from an entity that then allows you to short it. A stock is something, if you short something or naked short something you don't have, you have to borrow the stock first and then short it. Same thing here. You have record high lease rates with silver in London, anywhere between 5 and 6.5%. Normally, those lease rates are somewhere around 1% or a fraction of a percent. Even in times of stress, they barely get above 1%. Right now, they're between 5.5% and 6%. I'll talk more about that in a minute. But you also have falling open interest, meaning the demand by the speculators is falling with heavy delivery demand. So far, 58 million ounces have been delivered since late August. Almost 11,000 tons have been delivered year to date. This points to shrinking physical liquidity and mounting pressure on the market. In other words, these short positions are struggling to get the metal to cover their positions. As the lease rates go higher, the people who own it are like, nah, we're not going to give it away 5 or 6%, which is way higher than it ever is. With everyone standing for delivery, this is a problem. And when we talk about what's happening on the LBMA, recent data shows about 600 million ounces of silver are traded every day in London. There's about between 1 and 2 billion ounces of paper claims on meaning they could stand for delivery, between 1 and 2 billion ounces, yet the official available free float is only 140 million ounces. So in other words, if there's 1 to 2 billion ounces of claims against 140 million ounces available to be delivered, and a lot of that is already locked up and not truly liquid, what could possibly go wrong? In other words, London has virtually no free silver to meet these rising investor demands or to back the billions of ounces in outstanding contracts. This is getting interesting. And at the same time, you see the COMEX flush with metal. All of that metal, I remember I screaming, this is not about tariffs. And all of that metal that's come back to the United States has put I believe the U.S. banks on solid footing. Normally when the U.S. bank shorts COMEX, they go long delivery contract in London to offset. Well, they've brought all that metal back, and you could argue to put their book in order. These European banks are facing an existential threat. With lease rates and prices spiking, the risk of a delivery default in London is rising. And, this is the chain reaction that you would talk to.
In other words, when a time comes, how are they going to cover their shorts? How are they going to cover their contracts? They won't have the metals to do it. They have to buy the precious metals from somebody else. Who do you suppose that is? Well, that would be us, those holding on to precious metals. And they're going to have to pay a hefty price to get it back out of your hands. Anyways, that's it for now. Let me know what you think. I look forward to hearing from you. I am out.